Okay guys, this video is all about order blocks. I'm pretty sure you guys have heard me speak about order blocks for a minute now. This is going to be the video where I speak about the ins and outs of order blocks. What are order blocks? How do we identify the correct order blocks? How do we incorporate order blocks within our analysis? So let's begin by just drawing out our two lines of retail support and resistance. Okay, let's make this a bit smaller. So in a situation where retailers will buy at support, sell at resistance, buy at support, sell at resistance, buy at support, sell at resistance. What have we understood so far? That there is a ton of liquidity that lies below the lows and the highs. So there's a ton of money that lies below the lows and the highs, okay? So in this situation here, where retailers will buy at support, smart money will sacrifice their own positions by pushing the market, by selling the market, which pushes the market even lower in this case, which allows what to happen? Which allows retail traders to now FOMO into sells. So retail breakout traders, a breakout trader is basically somebody who trades a breakout. They don't wait for price to come back and retest a nice area for a nice stop loss. Breakout traders are aggressive traders who are waiting for there to be a break in the market, and then once the market breaks, they enter their trade. So in this case here, there will be a lot of sell orders right here. So smart money know that retail traders are entering buys right here at support. So they're waiting for price to be pushed up, okay? So retail traders are waiting for price to come up because that's all they're taught, right? They see a support respected once, twice, three times. They're thinking, okay, now the next touch is gonna go up because support was respected 3 times, okay? But in reality, what's happened is smart money will sell the market into lower areas, okay? And they will sacrifice their own positions, meaning what? They will be in drawdown. Smart money will be in drawdown. They will be seeing a lot of minus, okay? And then when there is liquidity taken from the retail buyers here, and there is liquidity lying above here there's liquidity pretty much right here because of the breakout traders, okay? Because this is what breakout traders are doing right here. They're entering the market here for sales, and their stop loss is going above the support that was broken, which has now become resistance. Because remember, we said when support is broken, it then becomes resistance, and when resistance is broken, it then becomes support for retail traders, right? So now smart money are in minus over here, but it's fine. Why? Because they've got enough liquidity now from the retail buyers, and soon enough they'll have enough liquidity from the retail sellers, okay? The breakout traders who entered right here, their stop losses are here. So what happens now? When price comes down, it goes back up and stops out the breakout traders, okay? So the breakout traders have now been stopped out. The buyers at support have now been stopped out. Over here is where you find your order block. You'll find your demand zone right here. You'll find your bullish order block, and usually the bullish order block, like we spoke about, what will it look like? It will look something like this, okay? I'm not sure if it's gonna let me draw it accurately. You guys know, okay? Just from the previous video when we marked out supply and demand zones and the engulfing candles, that's what we're looking for here. Okay, we are looking for the engulfing candles here. We're looking for order blocks right here, okay? And the reason why it would be an order block in an area like this is because smart money, okay, has taken the retail liquidity here, okay? And because everybody is buying over here, there is enough liquidity for smart money to sell and sacrifice their positions. And because smart money now selling and sacrificing their positions, and the market looks like it's dropping, this will initiate a lot of retail selling. All the retail traders, like we spoke about, they're all getting in this market. They're all selling, panic selling, FOMO selling. They're scared they're gonna miss the trade. They're scared they're gonna miss the move, or they're scared they're gonna miss the major drop, okay, because they're in sales and they want to make a lot of profit. So they all got in very late and they ended up getting stopped out. So in this area over here, in this area of support, there is an influx of buyers. There are loads of retail buyers, and smart money is just waiting for the perfect opportunity to sell the market lower, sacrifice their positions, just to bring the market back up and stop out the retail traders before the real move happens, okay? So as a result of this downwards move that was caused by smart money can now buy the market back up. Why? Because of the analogy I've given in the previous videos, guys. In order for there to be a buyer in the market, there must be a seller. And in order for there to be a seller in the market, there must be a buyer. This is where that transaction takes place, and order blocks leave footprints of where that transaction took place. So in this case, what the order block is showing us is the order block is showing us where smart money entered the chat, basically, okay? So it's showing us where smart money placed their opposite trades, okay? Or in accordance to the Google definition, it says order blocks are created when a breakout move doesn't go to plan. If banks get caught in a fake breakout move, they aren't going to sit and cry about it. They are going to push the price back up or down so that they can close out of their negative positions to join the correct side of the market, which is what we spoke about already. I'm just going to show you guys, okay? And another definition you guys can use, and I'm only mentioning this for writing down purposes, for those people who want to get the most accurate definitions, okay? You can write down: an order block is the accumulation of orders from financial institutions and central banks. Order blocks are actually special supply and demand zones that are formed when there is a block order. That is where the name order blocks comes from. It is formed by buying and selling of the banks and institutions. What we were speaking about before, the banks and institutions who have the hundreds of millions and millions and millions of billions of dollars, them leaving their footprints on where they enter the market. It won't always look like this. It's just an example, okay? I'm showing you guys on my own diagram right now, but I'm also going to show you guys later on the actual charts, okay? So in this case, what we are now waiting for is we are waiting for that change of character. We are waiting for that change of character where we are waiting for now that liquidity was taken here, we are waiting for price to go all the way back up, take the liquidity from the highs, okay? Or price can do something like this, okay? Price can do something like this. It can break support. And people might think, what's going on here? Sorry, wrong tool. People might think, what's going on here? Retail traders are thinking, oh yeah, support. Let me buy at support now. But what happens is they buy at support again. They buy at support again. Price maybe breaks that previous high right here, okay? Okay. Price will break that previous high right here. For us, we know this is a change of character. And when there's a change of character, what does that mean? Price is most likely going to come back down because it's taking the liquidity of this high right here. Remember, guys, the liquidity right here. Because it's taking that liquidity right there. Where is the next point of liquidity? Where's the next point of liquidity? Below this low right here, okay? There's another point of liquidity right here. So because there's a change of character now, because there's enough liquidity in the market for smart money to push price back up, price has broken the previous mini high, okay? Mini structure, which caused a change of character. So now as smart money traders, we know, okay, cool, there's about to be a shift. Why? Because there was a change of character, aka a mini break of structure. So once we see this happening, we know, okay, price is most likely going to come back down and liquidate these lows, touch this order block over here, which will allow us to enter positions from here, having our stop loss below the order block and targeting these highs as a first take profit target, okay? So that is what we are waiting for in terms of order blocks, okay? So now what happens is, because price moved away from here. Okay, remember guys, we spoke about the large banks and the financial institutions. They push price down, meaning what? They are still in minus. They are still in minus. So this order block is showing us where they sacrifice their positions. So they must now move the market back into the area where they entered their position. So over here, they must move the market back here so that they can close their trade for break even, so that they don't lose any money from that, from the sacrifice of the cells that they entered. Remember, they didn't want to enter these cells. They only entered the cells to grab liquidity from retail traders before they can have enough money to buy the market back up. Okay, so because they brought the market back up, the price needs to now come back down. They have to bring the price back down to come out of their original fake positions to now enter their real positions and move the price back up. So that is simply what an order block is. You wait for the order block, you wait for the manipulation. This is manipulation. You wait for the spring. So this is Wyckoff accumulation. Once you see liquidation, You either wait for accumulation at the bottom of a market if you're looking for buys, or if you're at the top looking for sells, you wait for distribution. So right now we're at the bottom of a market. So over here, accumulation would have been taking place. You would have got your preliminary support, your automatic rally, your buyer's climax, your spring, then your secondary test. Your secondary test in the spring, etc., etc., etc. Right? So after accumulation has taken place, you'll see an order block being left. So once price breaks, it has to come back to that order block, because financial institutions, if you entered the correct move, they are holding a lot of drawdown here, and the move cannot take place if they are in drawdown. So they have to come back, close their fake positions for break even, and then continue the market back up, because they now have enough liquidity to move the market back up. And that is how you trade order blocks and navigate.